was a poor show on the earnings front. For Wipro, the tech major has reported lower than expected revenue and profit for the second quarter. And the profit has come in at around 2,667 crores versus 2,886 crores in the previous quarter. Now, in signs of more troubles ahead, Wipro has forecasted a quarter three revenue at minus 3.5% to minus 1.5%. And we have the Wipro management team on ET now. Terry Jelaport, who's the CEO of Wipro Limited, Arpana Iyer, CFO of Wipro Limited, and Saurabh Govil, who's the CHRO of Wipro Limited. Welcome everyone to ET Now's Rush Hour. Okay, all right, we'll go across to Terry first. Very weak quarter two performance coming in there for Wipro and a weaker quarter three guidance. Your reading of the demand trends on the ground, what is your reading? What are you reading on the ground?
No major change with the previous quarter. We continue to be in this market with, a certain level of uncertainty that is slowing down, not so much the demand in total, but just the discretionary spend. And we are seeing it across industries. We've seen this pattern for, 2-3 quarters now. And, while we do a strong performance in terms of bookings in TCV, we've won, a lot of new deals. We have won, two $500 million deal, and yet the volume of discretionary spend continue to be lower than what it used to be. And it's particularly visible in a couple of industries like financial services, technology, or communication space. It will bounce back, but this discretionary spend is definitely impacting our overall top line.
Right, and Terry, there is a dichotomy of strong deal wins versus, the weak billings. Is there any specific project or client cancellation, of the one-off?
No client cancellation, no loss of client, no particular, I would say, one-off event. A lot lower discretionary spend than, in the past. We have a significant consulting business, which will be fantastic when the market is back, which has been doing great, a few quarters ago. But obviously, in a slower market, consulting is more impacted. We know that. So this is what's happening. If you look at the larger deals, the pipeline is as big as it's ever been, but the volume of those very small, deals has significantly reduced. The market, I would say, it continues to be, a little soft, frankly, right? And so that's what we are seeing. So what do we do? Given the fact that, we've been operating in a market where there was growth and we've grown tremendously, 40%, a little more than 40% in 2.5 years. Over the last few quarters, the growth is not here anymore. So can be an adjustment after a period that has been particularly intense from a growth standpoint. For us, it's actually okay. We are continuing to execute our transformation program.
Well, coming to you, Aparna, then margins have managed to hold steady. Going forward, given the seasonality and wage hike impact, do you expect the quarter three to be a much weaker for margins?
We don't guide for margins, We are seeing the headwinds play out in terms of, a softer revenue environment. You've seen our guidance. There are furloughs. Quarter three is a seasonal quarter with furloughs, and we are rolling out wage hikes. So yes, it is going to be a challenging task. We have several measures that have been put in place, and we will try and put up a defense on our margins. And what theory has shared is that we are likely to be range bound in line with what we've delivered over the last few quarters. So first up for this quarter three, it's going to be resilience, and then we'll look forward to expansion when the market eases.
Right, Aparna, sure, I appreciate you can't give a number, but I'm sure you have done the analysis on the impact of wage hike in Q3. Anything you can share on that front, and also, are furloughs higher than usual?
On the furloughs, yes, we are seeing more furloughs compared to what we've seen typically. It's factored in our guidance. On your point on, what's going to be the wage hike and the impact, yes, we have simulations, but, finally, we will know only when the rubber hits the road. And we will keep you posted next quarter when we see you.
All right. Please do keep us posted though. But moving to Saurabh then, when will the wage hike roll out, and what will be the level of hikes and variable pay then?
Our wage hikes will be effective 1st of December of this year. We will do it broad-based but selective, based on performance, based on criticality. So we will be doing that effective 1st December. Our variable payout will be in line with what we have done in the previous quarters, although it depends different business units on their performance. But all around 80% is what our employees would be getting as variable pay for Q2.
All right, Terry, also all are hopeful for a recovery, but any internal estimate for when will we see the recovery? Will it be in the Q4 or Q1 of next year?
We've learned over the last quarters to be a little bit prudent with the evolution of the market. But, if the market conditions remain where they are, there certainly will start to see a beginning of a rebound coming between Q4 and Q1, I think. That's all I can tell you at this point in time.
Right, Saurabh, then I understand that there hasn't been any fresher hiring this quarter. Fair to assume that you will not be going to campuses at all this year?
Q3 we haven't done it onboarded on H1, and Q3 will not onboard. But as things pan out, as Thierry said, Q4, Q1, seeing a rebound, absolutely we might look at it so very clearly. And we have people available for us to onboard. So we don't want to be in campuses as we speak right now. Our first commitment would be to honor the offers we have made.
Right. So Terry, the deal wins have been fairly robust at $3.8 billion US. Given the pipeline, is this sustainable? Do you think we will see a similar number in Q3 as well?
Based on what we are seeing for this quarter that we've started 15 days ago, yeah, I think it's going to be another quarter of strong performance in bookings. Of course, as you know, in bookings, you never know until the contract is signed, but it's looking good. I mean, we have a good volume of pipeline, as I said. We have, our account strategy where we are focusing on, less number of accounts, but accounts that are larger inside is actually paying off and allows us to increase our win rate as well as, Aparna was referring to. So yes, I think we are geared to deliver another strong quarter in terms of bookings in Q3.
Right, and finally, Terry, Europe, which has really held out okay-ish for your peers, has actually disappointed in your case. What really explains that?
Yeah, this is true. And I looked at it also. I frankly, our business in Europe has done remarkably well over the last 2 years. We've grown tremendously, 39%, 12% over the last 2 years. The reality is that we held pretty well in the first 2 quarters where some of our, colleagues in the industry were more exposed. And this time it's us who is, coming a little lower. There is nothing specific. I think, possibly some client realities here and there, but we'll bounce back. I mean, the volume of deals in Europe is strong. Our position in Europe is stronger every day. I'm actually confident in our ability to bounce back rapidly.
Well, thank you to all three of you for joining in today. All right.